Hey guys, we need to discuss the 4-year cycle theory and how late we could realistically bottom on Bitcoin. It does extend slightly into 2023, but not by much. So we need to get an exact date of that. So we're very familiar with the limitations of the 4-year cycle theory and the limitations of the Q4 bottom prediction. We also need to discuss the shorter term triangle on Bitcoin and what it could lead to. Let's get into it. So let's start off just by charting out Bitcoin, because obviously a lot of people, again, they see this formation here, they see this pattern, they know it's a triangle, they don't know much more than that. So let's chart it out from scratch, okay? So basically on Bitcoin, what we have is this. We have a triangle formation, something similar to that, right? The line actually extends all the way back here, if you want it to be rough with it, stemming from around the 8th of November, pulling that all the way through, and then we have a support level on a smaller time frame, something like this. Okay, and we can actually extend that back as well and see that it kind of lines up quite well with that rejection from the line back here on the 15th of November. And then, of course, we have the bottom line of the triangle, which is something like that, right? So we have basically a triangle within a triangle. We have a larger descending pennant formation, which is this massive formation here. And then we have a smaller symmetrical triangle formation that we drifted into slowly within this larger pennant. And so obviously we need to identify what are the support levels and resistance levels and how we can actually trade this triangle formation, how we can predict it's going to play out. Let me just go ahead and adjust that line back there, and it looks something like that. So we can do that by the weekly chart. We can go to the weekly chart. We can see, okay, well, where did the weekly candle close? The weekly candle closed here at around, 16.2K. Chuck that in there. We'll go ahead and apply that line to this chart over here at 16.2K, roughly something like that. We can see that lines up with support quite well on multiple wicks here. We also have the low point, which is a wick downwards to around 15.6K. We can go ahead and apply that to this chart. 15.6K is the low, of course, something like that. And then, of course, we have the June low, which is the top of the local range, which is at 17.6K. And we can go ahead and chuck in 17.6K here. Right, and just by identifying these three lines and just by doing this, 17.6K, something like that, right, just by doing this, we already have kind of like a trading plan ready to go for the short term if you're interested in that. If you're not interested in a trading plan, then you can just trade, then you can just, at least understand what's happening here. Essentially what we have is this, break to the upside, right, from this from either the shorter term triangle or the larger pennant. If we break from the upside from either of those things, which is going to be happening before the 22nd of November most likely, and even possibly by the end of the day, if we break this smaller triangle to the upside, we would be retesting 17.6K. So if we break this triangle to the upside, either one of them, retesting 17.6K, retesting the, of course, retesting the June low, which would be interesting to see what happens there. If we flip that, it becomes pretty likely that perhaps this maybe was the bottom. If we reject from that, it just doesn't really tell us much. It tells us we're still in the local range. So 17.6K retest if we break to the upside, and if we break to the downside of a shorter term triangle, right, we'll no doubt be drifting towards the bottom of the larger term pennant, and if we break that to the downside, we'll obviously be retesting the bottom here at 15.6K and most likely dropping downwards further, through which our nearest support, of course, on the weekly chart would be a retest of 13.8K on the weekly on kind of the weekly chart support there, stemming from the last bear market. So we can go ahead and chuck that in there as well, 13.8K. So again, just to clarify, if we break this whole larger pennant, if the larger pennant breaks to the downside, it's highly likely we go downwards towards 13.8K. And if either one of these triangles breaks to the upside, it's highly likely we retest that 17.6K level. That's basically what's happening in the shorter term. And of course, we will be seeing one of those scenarios play out by the end of November. So that's the shorter term chart on Bitcoin. What I will say as well is that, some people would say, well, Wolf, why would you think if we break down here, why would you think we're going to go down towards 13.8K? And my response to that would be probably because of the 3-day RSI. We have a 3-day RSI line, support line here. The camera might be blocking it. I'll zoom up. There you go. At 34 on the 3-day RSI. We're testing that right now. So any significant downside price action will lead us to drop below 34 on the 3-day RSI. And historically speaking, any time we have dropped below 34 on the 3-day RSI, we have seen a significant correction, right? We saw that in the 2018 final bear market drop. We saw that during the COVID drop. And we, saw that obviously during January, we saw a massive capitulation on Bitcoin. And we saw that during June, where we saw the massive June drop that led us down to 17.6K. So again, if we do drop down below this pennant formation, right, we will also be triggering a large sell-off based on the 3-day RSI, and I would assume that if we drop below this pennant formation, we would go straight, maybe not straight towards, but very, very convincingly, eventually would end up at that 13.8K to 14K level. And again, if we break to the upside, we're retesting the June low. So it kind of is Bitcoin just on the edge of two decisions here. It's kind of like, you know, on a, what would you say, at a crossroad. It's like which option are we choosing here? We're choosing to go up at 17.6k. We're choosing to see a final capitulation towards 13.8. That's kind of what Bitcoin's thinking here. And I think that making a prediction in this scenario is quite irrelevant. Doesn't really matter what your prediction is. And this is something I need people to understand as well. You know, traders don't make money by predictions. Traders make money by waiting for scenarios to be validated and then trading those scenarios. Predictions don't make money, actions make money. So let's wait and see what happens. If we make an action, if Bitcoin breaks out, we can take a trade to 17.6k. If it breaks downwards, we can take a trade lower. Okay, so that's what I mean. It's like if you're in a triangle formation, you can make a prediction all you want. But at the end of the day, you know, the prediction is not going to make you money. It's the action that's going to make you money, and you shouldn't be taking action unless a scenario is made valid. And that's what we teach in the VIP group. That's what we teach in the course as well. And I think a lot of people who are potentially, you know, slightly less educated when it comes to trading, they can't really grasp their head around that one. It's like, oh, but what do you mean you don't make predictions? Yeah, you make predictions. You make predictions when scenarios are activated. If we break this triangle to the downside, right, and it's broken to the downside, then you can make a prediction based on the triangle break. But making a prediction in the middle of a triangle, it's kind of like, what's the point? Because it could just easily flip the other way. Now, if I had to make a prediction, if I had to give you an absolute decisive answer, I would say it's more likely to go downwards. But my main point is it's irrelevant what I think. It's relevant what happens and what scenario is made active. So that's kind of a short-term chart on Bitcoin. And now I want to get into the 4-year cycle theory. I want to get into what the latest possible point we can bottom out on Bitcoin is. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megaworld Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. So this is the 4-year cycle date range trend on Bitcoin, triggered by the first halving in 2012. Essentially, within this date range trend, we have 4 sub-trends. We have trends from the amount of days from top to top, the amount of days from bottom to bottom, the amount of days from top to bottom, and the amount of days from bottom to top. So essentially, I'm going to delete the ones that aren't relevant for this analysis. The pink one is not relevant, right? We'll delete that. The red one is basically hardly relevant. We'll delete that as well. And we're left with the 2 things that are relevant in order to predict a date range bottom for Bitcoin in the bear markets. And that is the top to bottom days and date range trend, and the bottom to bottom days and date range trend. Now, as you can see, in 2014, we saw 413 days from top to bottom. We saw 364 days from top to bottom here in 2018. And so far, we have seen roughly we've seen roughly, 371 days from top to bottom. Okay, so realistically, okay, we could see 413 days again, right? We saw that in the past. So if we extend this across 413 days, that would bring us to around, what date would that be? The 26th of December, right? So we could bottom out within the date range trend at the 26th of December for Bitcoin. But obviously, then we need to consider, maybe we'll go further than that. And if we do go further than that, it wouldn't invalidate the trend, because we've seen a variety of different days between top to bottom in these 2 separate data points, right? We saw 413, we saw 364. Now, the difference between 413 and 364 is around 50, okay? So assuming we go 50 days further from 413, we could actually see Bitcoin bottom out 463 roughly days from the top, if that makes sense. And that would bring us to around the 13th of February on Bitcoin. So realistically, the date range trend on Bitcoin could realistically go until the 13th of February and it'd still be valid. Now, obviously, the further Bitcoin extends past Q4, the less precise the trend is in the future, and the more kind of the more bad, I guess you could say, the worse that is for us as traders, because we obviously want this to be as precise as possible. We need a more concise date range. And, if we extend overly past the Q4 bottom, it becomes rougher and rougher and rougher. It doesn't invalidate the whole theory, but it does become rougher and rougher, right? As you can see, now, if we were to bottom out in February, we'd be seeing a very rough kind of 100-day period for which we could bottom out in the next cycle, because obviously we had 364 days from top to bottom in 2018. We would have 462 days from top to bottom in 2022. That would be a 100-day kind of range for which we could bottom out in the next cycle. So it's not ideal, but realistically, right, we could, if you understand what I just did, we could bottom out as late as kind of early February in 2023. Now, ideally, we bottom out in Q4. If we do bottom out in Q4, that would be great, because that would kind of preserve the most macro predictability possible. And that's still what I'm expecting. I'm still expecting a Q4 bottom. I'm just saying, if by some weird kind of maneuver we bottom out, later, we bottom out, January sometime, it wouldn't fully throw the 4-year cycle in the trash can. It would slightly take it off its hinges, but it wouldn't throw it in the bin. Now, that's worth saying. Now, look, I know that's a pretty vague analysis there. I just did a very, very vague thing, but it is worth, kind of the overarching point is this. We can go a little bit further than Q4. And this is something I have spoken about in the past. Ideally, we don't, and I don't think we will, but we can, because this, you have to remember, this is a 10-year long trend, okay? I don't think a month of deviation is going to invalidate the whole trend and chuck it in the bin. All right, we need to be a little bit open-minded about it. Never once has this trend been a precise, okay, it's going to happen on that day in that week. It's never been that. It's never been a precise trend. It hasn't been around long enough for it to be that level of precision. Now, the more data points that it remains valid for, the more cycles it remains valid, the more precise it will be, okay? But I'm just saying, we could realistically bottom out in Q1 2023, and it probably wouldn't overly damage the 4-year cycle theory. Ideally, we do Q4. I think we'll do Q4, but that's just kind of the overarching point. I repeated myself enough already, all right? So anyway, guys, that's the video. Thank you for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.